Hey everyone, this is Mike Kramer of Mach Capital. Today is Tuesday, November 21st. It's around 7 o'clock New York time. Just a quick reminder, markets are open here in the US tomorrow. They'll be closed on Thursday for Thanksgiving. And then Friday, we'll only have a morning session from 9:30 Eastern to 1 p.m. Eastern. So a half day session on Friday. So we're getting some data tomorrow earlier than what we would normally get it. So tomorrow we'll be getting initial jobless claims. These numbers have been important because they're giving us a little bit of a real-time sense in terms of the direction of the unemployment numbers here in the US. Also tomorrow, we're going to be getting the University of Michigan 1 year and 5 to 10 year inflation outlook. This was a really big number that came out 2 weeks ago. Came in hotter than expected. Those were the preliminary numbers, 4.4 and 3.2. You can see that analysts are looking for this number to remain flat for the 1 year, but go down to 3.1% on the 5 to 10 year outlook. I'll just quickly show you why this is a big number. This 3.2% number was the highest reading since 2011. And you can see this is a number that we don't really get this high very often. You'd have to go back into the 90s when we just had higher inflation rates overall. And so this may be sort of an indication for the Fed that we're starting to see inflation expectations among consumers become a little bit unanchored. But again, we're going to want to see what this number comes in at. We've seen it around 3.2% a few times in the past in the preliminary numbers, but then they always come in below on the final. So we're going to want to see how that number comes in tomorrow. So clearly, when we look at interest rates at least, and we look at the 10-year, what stands out to me first when we look at the daily chart is clearly there's momentum shift. We've seen momentum really begin to accelerate to the downside here. We also broke what was a pretty big level around 46 on the RSI from a support standpoint, which was a level that held for a very long time as it was rising. We also can see that we've broken below the 50-day moving average. The 10-day exponential moving average has been acting as a resistance level, and we're trading, just basically right in between the Bollinger Band and the 20-day moving average as well. So right now, it seems like we're in this consolidation mode. But the one thing that I found really interesting is that it looks like we could be setting up for a potential move up in rates. And the reason why I note that is just because of the pattern that appears to be forming at this point in the 10-year. And it looks like it has this falling wedge look to it. And when you start backing out of it, you can see what I'm talking about. And you can see that, a little better when you go into the 4 hour window. You can see how we're just sort of consolidating in this, what looks like a falling wedge pattern. So this obviously would be suggestive that maybe we see a move higher in rates. I mean, certainly a move higher in rates wouldn't be unexpected at some point, given that it's typical that we see retracements. At this point, I really don't have a good feel in terms of where we would be in some sort of wave count. But what I would expect to see is a potential retest of this trend line at some point, and even potentially a move back up towards 480 at some point, given where the 61.8% retracement level is. But again, you can just get the general sense that momentum has shifted, but it doesn't look like it's potentially dead yet from potentially moving higher, just because we are approaching the support level around 430 to 435, and because we have some economic data tomorrow that could signal that maybe things aren't really quite as nice and contained on the inflation front that everyone would want to believe that they are. Now, the other piece of information here that we need to pay attention to is obviously the jobless claims number, because if we start seeing that number really begin to rise, especially on continuing claims, this could really start pushing the 2-year rate lower. To this point, we've seen the 2-year rate pretty much hold into this 481 area, 482 area. We haven't really seen that level break to this point. We've clearly broken the uptrend, and it clearly looks like we're in some sort of downtrend at the moment. And again, you can see the RSI is moving lower, but until we break this 483 level, we have to assume that we're just in this, category of just consolidating. Now, clearly, hotter data, a higher inflation rate, expectation rate certainly could lift the 2-year, while cooler data, if it breaks the 483 area, could set up that move back down to around 475 or so. When we look at the euro, we've talked about the euro moving back up to the 61.8% retracement level. We've talked about the euro being in overbought territory on a couple of occasions. And for the most part, we've seen the euro trade in this range up in here now for the better part of a week or two. And so right now, this is an area that's of great importance, right? Because if we were to see, for some reason, the euro break through this 61.8% retracement level, it would tell us a lot about where we are in this cycle. I mean, clearly, this is a big impulse lower. This could be considered a wave 2, right? And so if this is a wave 2, this would suggest the euro stops here and then continues lower. Certainly, it looked like for a time that was what we were setting up for with what had appeared to be a bear flag. Now, obviously, the market had its own intentions. But again, this is the spot where you would look for resistance on the euro around this 109.5 level. We can also see that the euro has had a very powerful move on momentum. So this is important, and it's worth noting and pointing out that this is a big level. If we obviously break above this level, there's certainly further room to run. Likewise, if we were to start to decline, if we were to break below 108.5, I think it sets up a move back into this 106.5 region. If we look at the pound, very similar, very powerful move higher. See momentum is completely shifted. You can see we broke a downtrend. You can see we've been kind of just using the 10-day exponential moving average as a support level. And we've just been basically rising up towards this 50% retracement level. So I would expect to find some resistance in this 125.90 to 126.30 area with a break of this high here at 124.90, potentially setting up a move lower. Again, this doesn't look complete, but this is where we are at this point. And again, like the euro, very big impulsive move down. If this is a wave 2, we shouldn't really go too much higher, and we should see a reversal with this coming down again. When we look at the yen right now is finding support at this 148.25 level. There's been some speculation maybe the BOJ is finally going to move at some point. Certainly the bonds in Japan aren't acting that way. We've seen the 10-year in Japan really fall quite a bit over the last couple of days. So this doesn't really look like a BOJ that's going to be on the move. But again, that could just be falling in line with what we've been seeing in the U.S. So again, this is your level of support at this 148.25 area. A break of this support level does set up a move down to 146.40 to 145 or so. Likewise, I think the upside is fairly limited to around 150, 190, 152, being that this is really where we've been the highs at, and we haven't really seen the market move much past it, and that was the highs that we even saw in October of 22. When we look at the when we look at the Nasdaq had what looks to be an inside day. This is when we have a bar inside the previous day's bar candle, and typically when you get these big up moves and then you get these inside days, sometimes it can lead to the market moving down the next day, a sign of exhaustion. Now, we had what looked like that going in to November 13th. We had an inside day, and then, of course, the next day CPI comes out, the market gaps higher, and that whole inside day kind of falls apart. So certainly you can see down here, though, we had an inside day after a big sell-off, and then the market did reverse higher. So inside days typically, in my experience, leads to a reversal of trend. And so this would suggest to me that the buyers are starting to get somewhat exhausted here. So really what you would want to see tomorrow, if this is going to be a move lower, is you want to see an undercut of this low at 15,871, and then you're going to want to see if support holds at 15,750. If support holds there, then that's a different story. But if this breaks, there's a big way to go back down to 15,486. Likewise, if we were to move higher early in the morning, you take out this high at 15,966. Then we're talking about going back up over 16,000 and potentially even surpassing this high. When we look at the Dow, at least again, when we look at it on a daily chart, you can see inside day again. We didn't get that inside day on that Monday that the NASDAQ had it. So that's certainly interesting that we had this difference. And maybe that's why the pattern didn't work that time. Here you can see an inside day as well. And this would also suggest that, again, confirmation that we're likely to see prices move lower tomorrow. Again, but for this to happen, you want to see the Dow really break below this 34,990 region, which has been a resistance area now, and that could certainly lead to a retest of 34.8 and eventually a potential gap fill at 34.3. Likewise, if you start taking out these highs early, 35.2 becomes a target. And then from there, you could really start thinking about moving up even higher, maybe 35.6 or so. And that's really where we are. I'll just mention the S&P really quickly as well, because again, like the other three indexes, we had the inside day. We didn't really have an inside day on the 13th. You can see the high was 44.21. The high here was 44.18. So it looks like maybe it was an inside day, but it really wasn't. So again, that may be why the NASDAQ didn't really get that signal to work. Again, we are seeing that here though. So again, this sort of again implies to me that there's a good chance that we're just seeing some buyer exhaustion up here, which would again suggest 45.25 is the level you got to break below, with support at 44.90, and then we're talking about a gap back down to 44.10. That would obviously be a pretty big move, but again, this is how it looks like we're setting up. Clearly, a break of 45.60 sets up a retest of this high that we had back in the middle of July at 4,600. So at this point, we're just continuing to watch. I'm still leaning towards the fact that I think the rally is likely to be in the final stages of final innings of this move, just because I continue to believe this was a 5-wave impulse down and this was a 3-wave impulse up. Additionally, we know that the market was very short gamma down at these levels. That triggered a squeeze. This caused CTAs basically to flip from being short to covering their shares to becoming outright buyers. And from what I understand and what I've been reading, they're pretty much at the end of that as well, which could be an indication, why we got an inside day today, and maybe another indication as to why the buyers may be sort of losing some momentum here. So anyway, that's all I have for you. Hope you have a great couple of days, and we'll talk to you again soon. Bye.